Hello my friend, Vitaly Dubin is here, and in this video I want to share with you the 12 mistakes that rich people do not make in investing. So you already know, if you want to be rich, you have to master investing. So if you're new to investing or you've been investing for a while and you find yourself keep losing again and again money in the market, then this video is especially for you. Mistake number one, not doing due diligence, not doing your own research, right? Everybody says, yeah, I'm doing the research, but they actually do not do. They are not understanding the deal, the numbers, what is involved, who is behind this, what's kind of the number looking at. So they're just diving into it too rushed, too quickly, because they just want to start something, invest in something, and they fail to do due diligence. Rich people also do their own research, they do the due diligence, and they do not make rush investment decisions. Mistake number two, trying to time the market, right? They're waiting for the perfect opportunity to get into and buy the asset or buy a certain stock or a certain crypto. Look, the rich people understand that it's not about timing the market, it's more about time in the market if you're investing in the right thing, in the right asset, right? Nobody's going to get it perfectly, like catch the bottoms and buy at the exact bottoms, right? So you need to be more strategic. People who are rich, they think in much longer time horizons. They think into years or even decades in the case of Warren Buffett, right? And not in the terms of weeks or a couple months or some people like in a matter of days. You have to expand your time horizons if you want to build wealth long term. The third mistake, and that's a big one, short-term thinking, short-term bets, right? So if your time horizon is very short-term, like you are speculating, that's what you are doing. I did all of these mistakes, I did them all. So I am coming from experience, and that was the reason why I lost a lot of money in the markets. But I don't want you to make those mistakes. So, short-term thinking and short-term bets is the mindset of speculation. You go into something in the hopes that you're going to double the money in a week, in a month, in a couple of months, or triple or quadruple or whatever the case may be, right? It's you want this to work so badly. You want this to work out. And you are not realizing that you are not really investing, but what you are doing is you are speculating. And I used to speculate with 95% of my money. I know, it's crazy. So I didn't know I was speculating, but I was actually speculating in the markets, which caused me to lose almost everything that I made. And it was very, very painful. I'll share in another video how it all went. But this is the root cause, the short-term thinking. When you are investing, you invest in for the long term. You invest in something valuable that is going to keep being valuable a year from now, 2 years from now, and grow in value. This is the type of investing. Now, speculating, you can still speculate if you want to, on 5%, 10% max of your portfolio. But if you speculate, 50%, 90%, you're not going to sleep well at night. You're going to be checking all the time what you're doing and like worrying what's happening with your investing because you're too much speculating. Mistake number 4, being cash poor. So if all you have you invested, right, then you don't have any cash left. You're cash poor. And that means that if the market goes south, if the market goes down on your good investments, you will not be able to buy more. So for example, for those people in Bitcoin, right? When there were dips in Bitcoin, they took the opportunity to buy more. And how they take advantage of these opportunities to buy more? When it crashed, because they had the cash. Never be in a position when you are totally cash poor and everything is invested in the markets. There is a power in having some cash aside or in stable coins in order for you to take advantage of market crashes. Let's continue. Mistake number 5, putting all eggs, this is the eggs, in one basket. You probably heard this millions of times, but are you not doing this mistake? Putting everything into one investment. No matter how good it sounds, no matter how you are confident about this investment, this is a huge mistake, because if something happens to the industry, unforeseen forces, unforeseen things, black swan events, something going on, this one investment, if you put everything into it, can wipe you out completely. So never do that, putting everything into just one investment. But mistake number 6 is too much diversification. That's also a mistake. And that comes from a lack of understanding of what it is that you are investing into. So you say, okay, let me just go into 100 coins in the top 100 crypto market cap. And I'm going to put, $100 into each one of these 100 coins. So $100 times 100, right, is $10,000. So you spread $10,000 among all the top 100 coins. You're too much spreading yourself thin. You're too much diversified. You don't need to be too much diversified. You need to have some diversification, of course, but not too much. You need to know what you're investing into so that it is a solid investment that can grow in value. Mistake number 7, investing because of somebody. Investing because of a friend that told you to invest. Investing just because you read about it in the news. Investing because you saw a video about it on the YouTube, and that's why you decided to invest. That's not a good reason to invest, just because somebody told you. Because usually what happens when somebody tells you to invest into something, they already invested before you. So what you're buying, you're pumping their backs. That's one scenario, right? They have, usually everyone has some kind of motives behind if they're recommending investing number X, or maybe they're getting a compensation for it, they're getting commission on it, or something else, right? So if you're investing something, then it goes through this. Do your due diligence. Do your due diligence. Take a look at your position, your specific circumstances, and that's what you decide. Mistake number 8, investing in what you don't understand. Oh my God, this is such a huge one that ties directly to the first one of not doing your own research. If you invest in something you do not understand, in a new vector, a new industry, you don't have expertise there, then you're basically gambling. You don't know what the heck you're investing into. So whatever it happens, like this is a mentality of a gambler. You need to invest in what you have competency. If you have competency in real estate, then focus the majority of your money into real estate because you understand real estate. If you understand the stock market, then invest in the stock market because you understand it. If you understand Bitcoin, then invest into Bitcoin because you understand the long-term value of it. You understand what you're investing. Don't invest in Bitcoin just because I said invest in Bitcoin or somebody else said invest in Bitcoin. Invest into it because you understand what it is that you are investing into. Mistake number 9, failing to rebalance. Failing to rebalance. So what does it mean rebalancing? So if you have a strategy that, let's say that you invest 70% into real estate, you invest 20% into stocks, you invest 10% into the cryptocurrency. And let's say time has passed and your real estate, grown from $75,000 to $100,000. And your stocks grew from $25,000 to $50,000. And your crypto grew from $10,000 to $50,000. Now, you see how the ratio, the proportions went completely different with time. So when you rebalance, you need to get back to your original strategy. You sell some crypto that made you profit and you put it more into the real estate. So this way you're rebalancing, you keep it portfolio more safe, right? And this way you grow your wealth strategically. Okay, so that's important. rebalancing from time to time is very, very important. Number 10, big mistake, panic selling. Panic selling happens when you do not understand the long-term horizon and you do not understand what you're investing into. So when the market crashes, you are panic selling and you are likely to go and sell into the capitulation, sell into what everybody else is basically selling, and you are losing. You are losing here when you are panic selling. But that happens when you do not understand the long-term value. Let's say on Amazon, there was a time when Amazon stock was down 80%. Despite the growth of the company, the stock was down 80%. So a lot of people panic sold Amazon, but smart investors, they bought more. And that's how they make a lot of money. When Bitcoin went down to $3,500 during the COVID crash, there was a lot of people panic selling Bitcoin. But the savvy investors, they've been buying like crazy. They're buying like crazy because they understood the long-term value of what it is that they are buying. So, mistake number 11, not taking profits. There is something called unrealized profits. It's whenever you are sitting on the profits, but you do not realize it. So, guess what? You may wake up one day and your unrealized profits goes into losses and not profits anymore, and big losses. So you have to learn the art of taking profits. Whatever you're investing into, let's say that it already more than double in value. So take your initial capital out and then take profits along the way. As it goes up, take some more profits. If it goes more up, take even more profits, right? Taking profits gradually is a very good strategy, and most people do not do it because it's hard to take profits. Just as it's hard to take a loss, it's hard to take a profit. Click on this button of sell and make these profits realized, right? And after you do that, don't forget to rebalance your portfolio. And mistake number 12, constantly checking your investments. If you are constantly checking on your investments like this, if you are in the phone like this, you are like zombie, you're like, oh, is it going up? Is it going down? Like, what's going on? If you are like this, if you cannot sleep, you wake up in the middle of the night and like, what's going on with this? That's for sure a sign that you are doing it wrong. You are too much. You invested too much. You're worrying too much, right? You're over-invested. So you have to be careful when you are creating your portfolio and investing. Do it in a way that it will not gonna stress you. So you don't need to check every day what's going on there, and you can be okay. You can be relaxed. Okay, make sense? So those are 12 very common mistakes in investing, and you may choose to rewatch this video if you need to several times to understand that those are super critical things to always keep in mind when you are making any kind of investing, so that you don't make those type of very common mistakes that might cost you a lot of time, stress, emotions, and money, right? And just understand that it's better like to go, more gradually, making wealth and keeping wealth than to be like a gambler, to have a short-term thinking and bet everything into one thing and think it's gonna make you a millionaire, and then you lose everything. I hope that it serve you well, that it help you in so many ways. I'm here to help you, support you on your journey to making wealth and living lifestyle of freedom and abundance. It's been Vitaly Dubinin. Follow me on YouTube, on Instagram, on Facebook, and I will see you guys in the next video.